The Australian dollar is up about a cent this week, boosted by the RBA decision on Tuesday and strong commodity prices. But next week it's likely to be extremely volatile, with global markets firmly focused on the US presidential election outcome. The Aussie dollar bounced from around 76 cents to almost 77 cents after the RBA decision on Tuesday. The RBA kept the cash rate at 1.5%, which was widely expected, but the tone of the statement was perhaps a little more optimistic than some might have expected. The RBA is still pretty confident on the outlook for economic growth, and it dropped no hints that it was seriously considering another rate cut anytime soon. The RBA mentioned that its forecasts for inflation and growth were little changed compared to 3 months ago. It noted an improvement in the housing market in some cities, but of course it is still a bit concerned about the labour market. After all that, market pricing for another RBA rate cut by February is down to about 20% chance. The Aussie also continues to find support from commodity prices. This is now starting to show up in the official economic data. This week we saw September trade numbers. This showed the deficit narrowed to $1.2 billion, which is the smallest deficit since December 2014. Leading the rise in exports was coal. But it was actually a slightly smaller rise than we had expected, so we think there's a lot more to come. In fact, Australia should be starting to produce trade surpluses in the next few months. On next week's Australian calendar, we have surveys of business and consumer sentiment. But all this will be overshadowed by the focus on the US election, with the results coming out on Wednesday, Sydney time. The Aussie dollar has shown itself to be very sensitive at times to major political turmoil in key economies. Remember that the Aussie fell more than 3 cents when we saw the Brexit vote in June. Hillary Clinton remains the favourite in the polls, although her lead has narrowed. A Clinton White House is widely seen by investors as being similar to the current Obama administration, not producing any major changes in terms of the US economy and certainly global trading arrangements. There would, however, still be a reaction in markets to Hillary winning. We would expect that equity markets would rally and the Aussie dollar with it as well. That's very clearly been the pattern in markets when polls have changed in recent weeks. In this scenario, the Aussie could probably test 78 cents, buoyed by that support from equity markets and strong commodity prices. A surprise win for Donald Trump, however, would probably prove to be very negative for the Australian dollar. A key part of his platform all along has been protectionist trade policies. Specifically, he is looking to impose very large tariffs on goods from China and Mexico, potentially Canada as well. Obviously, any huge setback to trade for China has grave implications for Australia's trade. So we would expect that in the event of a Trump win, we would see very steep falls in equities, and the Aussie dollar could fall as far as 73 cents on the day. Remember that we will get the results during Sydney trade on Wednesday afternoon, unless of course it's a repeat of, say, Bush versus Gore in 2000, in which case we'll have to wait for some time. Either way, Wednesday is going to be a huge day for financial markets. We'll speak to you next week once the dust has settled.